Good morning, Paul Georgie from Allendale. It's August 23rd, Thursday morning, and we just got the results of the USDA weekly export sales numbers. Corn came in at 325.1 thousand metric tons. Trade was looking for 200 to 350. Soybeans 718.7. The trade there was looking for 500 to 650, and wheat 474.8. That's within range of estimates of 400 to 550,000 tons. So not much reaction there, not much reaction to the futures market after this report, as most of those numbers are in line with what the trade was expecting. The talk this morning probably comes, and the excitement comes from the outside markets. We've got a risk-on type attitude circulating now in the base commodities. Gold up over $20 an ounce this morning. The dollar weaker again here today, and a lot of this stems from the news yesterday out of the FOMC meeting that the governors are actually considering or talking about, thinking about is probably a more better description of the situation as of possible QE3. So more money dumped into the system is a possibility if this U.S. economy doesn't show some life here very soon. So that's provided some underlying support to base commodities and risk on inflationary type action. We also had economic news out of China this morning. Their PMI number hit a 9-month low, down to 47.8 versus July's number of 49.3. But not having a huge negative impact here to the stock market. We see stock indices firming up here today. In the grain complex, the crop tour is continuing. Yesterday, the Illinois numbers came in from the Pro Farmer Crop Tour, putting the yield in Illinois a little higher than what the USDA had as far as their total state production. The Iowa numbers, western Iowa numbers, are actually probably a little better than what trade was expecting, but the full Iowa number will not be completed till tonight, so we'll see what the eastern part of the state has here today. Watch Twitter, and you'll get that information as their tour progresses. The western part of that tour will be moving into Minnesota, where they should be getting some pretty good yields. Our customers up there are telling us that they have got some very good-looking corn crops, and it looks like some pretty good yield potential in Minnesota. We'll get the final number from Pro Farmers Tour tomorrow, so we'll be watching for that as we get closer. The wheat situation, Russia's concern of cutting off exports because of tight production. There's been no word of that yet, but the government there and their economic arm that follows grain is suggesting lower production than what was recently released. So getting to be more likely that they will need to slow down or shut down exports here within probably the next 45 to 60 days. The basis levels continue to be strong here at the Gulf, although the processor bids are actually better than in the central part of the U.S., better than the Gulf bids right now, and continuing to be stronger. The corn, for instance, we've got 62 cents premium above CEP for delivery to the Gulf, 55 cents over the CEP for processors in central Illinois. The thing to watch here as we move into the weekend is the typhoon off of the Pacific coast of China. That is expected and targeted to hit the Dalian area, the largest port in China, and that region moving northeast of there. That covers about 20% of their corn production. So with heavy rains and winds, could create some damage there. Traders are watching that very closely. That's not expected to hit that region until next Thursday. Closer to the U.S. here, we've got Hurricane Isaac in the Atlantic moving, expected to hit southern tip of Florida and move into the southeastern portion of the United States. The Euro model actually has this system moving further west and toward the New Orleans area. If it would hit in that area, that is a chance to bring some moisture here to the Midwest. But right now, the majority of the forecasters are looking for that to stay further east and provide some rain in the southeastern part of the United States. Processors' bids are expected to stay strong, but right now they've got enough soybeans around for the next couple of weeks with the hopes of new crop harvest getting underway to fill some of their needs after that. In the livestock market, cattle market's relatively quiet. Dressed beef, slight changes yesterday. The big change came in the pork cutout values. They were down $2.09 again yesterday. Just a large number of hogs continuing to move to market here with the larger or high-priced corn and the outlook for tight supplies. Producers are moving some hogs ahead here, also moving the some breeding stock the way it looks to us as far as to get the slaughter levels of where we're at and the supply of pork coming to market. We're seeing cash hog markets down $1.50 here this morning, although cold storage reports yesterday showed a decline and decrease in meat in storage, which should be positive and is suggesting that we're not slowing down demand very much. But the heavy supplies coming at us here in the short term is what's pressuring hog prices. So stay tuned with Allendale Research. Don't forget to sign up for the Allendale Ag Leaders webinar next Tuesday, and to help participate in the Allendale yield survey that we got going on right now. You can log right onto the web and fill out the form there. It'd be greatly appreciated and certainly help give us some accurate results. If any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.